Today I'd like to talk to you about how your retirements are going to be taxed both in America and in Israel. Okay. For those of us who are U.S. citizens, we have two different tax systems. We have the Israeli tax system and we have the the Israeli tax system. And America is one of the few countries you leave its borders and it continues to tax you. In Israel, because you're a resident of Israel, you're subject to Israeli taxation. And some people don't realize that America may decide that it's going to treat one item like this, and Israel will do exactly the opposite. Sometimes you're going to see where in Israel an item will be tax-free, or in America the item will be tax-free, but in the other country it won't be subject to tax. And that usually gets people very, very confused and sometimes upset, and they should understand how both tax systems interact. In addition, there's a tax treaty between the two countries, so you won't pay double taxation. So let's start off with Israeli taxes. What's exempt? Your U.S. Social Security is going to be exempt both in America and in Israel, and that's because of the treaty between the two countries. Ordinarily, that income would be subject to tax both in America and in Israel. For Israeli Bituach Leumi, if you're receiving an old age pension, that is subject to tax in Israel, but then it's exempted. So in effect, it's exempt. If you have U.S. government pensions, if you have state government pensions, if you have municipality pensions from any place in the United States, that ordinarily would be subject to tax in Israel, but because of the treaty, it's exempt. Very, very nice thing that you're exempt in both U.S. Social Security and also on your state or federal or municipal pension. Okay. So let's say you have a pension or you have a retirement plan. Well, that's be subject to tax in Israel. And I'm talking about a foreign plan. The general rule is, yes, it's subject to tax. They'll give you a 35% exemption. For example, if you have $100 of retirement distribution, let's say for your IRA, $65 will be subject to tax, and $35 will be exempt in Israel. That 65% will be taxed at regular graduated rates, and you'll get a credit for the U.S. tax paid if the U.S. has a first right to that tax. In most situations, that's not the case, and Israel actually has first right to tax on your U.S. Retirement plan because of the pension. Because of the tax treaty between the two countries. Now, Israel has a section in the law, it's called 9 Gimo Rabati, where it says if you have a foreign pension, we're not going to tax you any more than had you stayed a resident in your country. So, for example, if you have a 401k plan, or if you have a 403b plan, or if you have an irregular IRA, basically what happens is when I prepare a tax return, I calculate the American tax, then I stop there, I give the tax to Israel, and what happens is I pay the tax to Israel and I go back on the American return and I take a credit, and the treaty allows me to do that. So what happens is I don't pay any more than I would have paid to the United States, but I pay it to Israel instead. Now there are certain conditions where you can utilize this area of the code. First, you have to be either an Oleh or in some cases a returning resident. And if you're a returning resident, you have to fit some specific conditions. And as I said again, because of the treaty, you can pay that tax to Israel, take a credit into America, and you're no better or worse off. Now let's deal with Israeli pensions. If you have an Israeli pension, the general rule is 42.5% is exempt, and then 57.5% is taxed at regular graduated rates. Now there is a ceiling for the 42.5%, and that ceiling changes every year. Also, the 42.5% exemption changes on a yearly basis. 2 years ago, it was a 35% exemption. Now it's a 42.5%. It's supposed to go up to 67.5%. If you receive severance pay from an employer, for example, I'm 65, I get a severance package, and I also get a pension, I cannot enjoy the severance exemption that we will see in a minute, and the 42.5% exemption on the same payment from the employer. It's an either or. If you have Kupat Gimo, which was a retirement plan that's sort of like an IRA, that plan, in your full retirement age, that distribution is generally exempt in Israel. If you get severance pay, what happens in Israel, if you work for an employer, they have to give, and you are fired, or you leave under certain circumstances, you're entitled to severance pay. And that severance pay, for each year you worked, you get 1 month of your salary. And each year, there's an exemption. For 2013, it's 12,120 shekels that would be exempt. For example, let's say that your monthly salary was 20,000 shekels. The exempt portion would be the 12,120, and the taxable portion would be the difference between the 20,000 and the 12,120 shekels. Keren Hishtalmut. It's an employer educational fund. If you put money into this plan, what happens is the employer puts in 75% and the employee puts in 25%. After 6 years, you're eligible to take the money out tax-free. If you're full retirement age, and it's been 3 years since your first contribution to the plan, you're able to take out of the Keren Hishtalmut plan. Also, in certain circumstances, when you use your Keren Hishtalmut money for educational expenses, that also is an exempt distribution. So I just want to give you an idea of what the Israeli tax rates are, and you can take a look at them on your handout. Okay, now let's flip to the U.S. side of taxation. As I said in the beginning, we've got the U.S. system and the Israeli system, and many times the treatment is vastly different. What we just saw is the Keren Hishtalmut, the Employee Educational Fund, totally tax-free in Israel. Not so in America. It's subject to regular tax rates, less the employee contributions. So if the employer puts in 75% and you put in 25%, that 25% is exempt. That's your basis. On my returns, I also put in the employer compensation, the employer part that is put into the plan, so the person actually gets the benefit of 75% and then increases their basis. Severance pay. As I just said, for Israel, we have the first 12,000 shekels, 120 shekels, exempt. Not the case in America. You get severance pay, that's taxable compensation. And unfortunately, under the Section 911 exclusion, which lets you exclude for wages up to a certain amount, only a small portion of your severance pay can be excluded in that. Now, if you have taxable portion of severance pay, the credit that for the taxes you paid in Israel can offset the taxes that would be due in America. If you have an Israeli pension, that Israeli pension is subject to tax in America. You get taxed at regular rates in America, less your employee contributions, which is your quote-unquote your basis. And obviously you get credit for your Israeli taxes that you paid on your pension. But for example, let's say you pay almost no Israeli taxes on the pension. You could have a situation where you actually will end up paying American taxes because you have no Israeli taxes to shelter that tax due. If you have Kupat Gimel, same idea. It's totally exempt in Israel, subject to tax in America, less your contribution. If you have U.S. Social Security, that's exempt because of the treaty. Generally, what happens if you live in America, that Social Security, it has a test. It's either taxed at 0%, 50%, or 85%. And because of the treaty, that's not applicable. It's totally exempt in America. Now, one of the nice things about Social Security is you can have that directly deposited to your bank, both in Israel and also in America, whatever you decide. One of the things that people don't realize is if you work over 45 hours a month, this is different than if you had lived in the United States, and you're between 62 when you can first start getting U.S. Social Security and your full retirement age. On a later slide, we'll see what the full retirement age is. It's actually on my next slide. You will have your benefits reduced. The Social Security Administration will actually send you a questionnaire and say, we'll ask you if you're working, and you have to send it back. Again, people think that it's based on your earnings. If you live overseas, that's not the case. It's based on the number of hours that you work a month. And generally, when I have clients that get letters from Social Security asking them if they're working, they have to prove that they're working less than 45 hours a month, and generally we get their employer to write a letter as a means of proof.
That's under 66, is that enough?
So this is the full retirement age. Depends on your year of birth. So for example, for myself, my full retirement age is 67, whereas somebody that was born from 1937 and prior, their full retirement age was 65. So these are the tax rates in America depending on what your filing status is. On this slide and the next slide. One of the things that I want to make you aware of is if you're getting an Israeli pension and you're also eligible for Social Security, you're going to have your benefits reduced. It's called the WEP. You can look it up on the Social Security website. And then what will happen is they'll eliminate 50% of your benefits up to a certain amount. So it's something to keep in the back of your head when you're going to get Social Security.